Do you think the market is headed for a crash? You've probably been looking at the statistics and how fast the prices have been raising and are feeling like this market is really ready to readjust. We're headed for a crash. Well, in this video, I'm going to be talking with my good friend Steve Ploetz from the Carlsbad Century 21 office. We're going to be talking about market conditions and what exactly is going on. So stick with us and let's get into it. My name is Steve Ploetz. I'm a realtor with Century 21 Award out of the Carlsbad office, which is in North San Diego County, and here with a very good friend of mine, high producer, John Alesi, who does South Orange County and kind of the cities around Mission Viejo. John, thank you for joining me. How are you? How's everything?
Great, Steve. Hey, thanks for the opportunity to jump on the call today. It's been a crazy market, and we're going to get into that in just a minute. But just for some quick background, I've been with Century 21. I work in the Rancho Santa Margarita office, which is kind of just inland off the coast. If you're familiar with Laguna Beach, we're just way inland, about 15 miles. So I cover Mission Viejo, South Orange County, cities like Laguna Hills, Laguna Niguel, Coto de Caza, that sort of market area.
John, I'm looking at my notes here. It says that you've been doing it for 200 years. Is that
accurate? It's actually 197. But you know, I have a real quick story. I got into the business in 2006, as the market had just exploded. The bubble had burst and I had no clue. So I rode this crazy thing down all the way to the bottom and have picked it up all the way back up. So
I don't know if you know it. I started at the same time, licensed November of 2005. So I think you and I didn't know that, you and I experienced kind of a similar market, which was get a transaction or two under your belt, think, man, this is so easy. Man, this is great. Then the bottom falls out and you got to actually work and figure out how to navigate it all. So that's a good segue, John. And what I like is that we're in a little bit of different markets, you being in the Orange County market, me being in the San Diego market. What, in your opinion, are there similarities to this market to when we started in 2005, 2006? Kind of big question here is, are we at the top? Is this a bubble? Or is there, in your opinion, neither of us can see the future, but as somebody that does a good amount of business in South Orange County, what do you think? What's this look like?
You know, it's on everybody's mind because all the naysayers want the bubble to burst so prices will be dropped and cut in half or down by 2/3 or a third or whatever. But you know, I don't see. Well, let me backtrack. I used to say the only thing that would cause a real estate bubble to burst would be a catastrophic unemployment in the United States. So what do we have? Jesus.
Yeah, no, absolutely.
Catastrophic unemployment.
For sure. And it's the separation and the number of people that have been furloughed and laid off and all this different stuff. So do you think that that translates into a downward shift in our market?
I think it's going to change. Well, we haven't seen the change yet because we still see this really high demand, and a lot of houses, not a lot of houses, but a significant amount of houses are still on the market and going into escrow and selling in 3 and 4 and 5, 6 days. So the velocity is still there, although the numbers are down. The gross number of buyers and sellers is off. I don't see the bottom dropping out like we did in 06 or 07, 08.
No, and I think it's a great point, at least for the San Diego market. What I've seen is relating it back to that market. We saw such a quick influx of inventory of distressed property, of people that couldn't make mortgage payments. I mean, that certainly as things started to shift and balloon payments came due. But I think a lot of people also forget that at the time, lending became extremely restrictive, and it was very, very difficult it went from, the pendulum shifted quickly. At first, stated income, you could be working at an hourly wage under $20 an hour, right, qualify for a $500,000 or $600,000 or $700,000 house because you would just state the income. And then all of a sudden things shifted and it got super conservative where qualified people couldn't get loans. And so I agree with you that this is a different market because the buyers that are out there, I don't know what it's like in South Orange County, but we experience here in North San Diego County, a lot of buyers that have good job history, a lot of strong down payments, 10, 15, 20% down, not seeing a lot of small down payments, certainly no first and second, 0%. There is VA financing for military buyers, but that's government backed. And it sounds like, I mean, there certainly are some similarities between the two markets in that we have a tremendous amount of demand. And I feel like until we get enough inventory to match that and eat up all that demand, buyers are going to continue to be pursuing properties, writing offers, chasing the market.
Yep. Yeah, I would agree. I think it's pretty universal in California and in a lot of other markets, but you're right. The inventory is really putting a lot of pressure on the buyers to push the prices up, make these crazy offers, buy a house with no appraisal contingency, pay 20, 30, 50,000 over the asking price, 10 offers on a house. I think, you know, you're probably seeing that in your market as well as we see it here. The one thing that I would speak to about the strength of the market is that unlike the bubble back in '08, where nobody was qualified to have a loan, now everybody who has a loan has been qualified, and anybody who's getting a new loan is also being very, very thoroughly qualified. I mean, they want to know where all the money came from, what your job is, you know, the typical qualification questions, but the underwriters are really going deep. You know, they're not letting anybody slide.
I think it's a great point. So if you're recommending to if someone comes to you and says, John, I'm a first-time home buyer, I'm looking in $500,000 to $600,000 price point. I'm nervous in this market. Should I buy now or should I wait? I mean, obviously, an election year, there's a lot of unrest, we'll call it,
Right.
and not sure if that's good or bad from a buyer's standpoint. So if I'm a buyer, and I'm first time and I'm getting started out and I'm early 30s, just getting married, should I jump in now or would you wait until whenever, January, February, next year? What do you think?
Yeah, that's a really tough question. To you know, when you consider all that's going on, there's so much chaos going around. I think if you feel like your job is stable and you're in an industry that's stable, and we're seeing more places opening up again, I think it's okay for first-time buyers to jump in. Again, I don't see this wholesale falling out of the market, so I think first-time buyers, okay. You know, will the prices drop a little bit? Maybe, but maybe not. You know, this crazy demand is keeping that price point pretty high. It might take another 5 years for the prices to level off again. You know,
I agree with that. And I feel like there's been a lot of discussion about if interest rates adjust. And I think that what could potentially happen in the short term is that if the interest rates go up a little bit, then there's going to be a little bit of a frenzy where people feel like, oh, shoot, now's the time because interest rates are starting to go up. So honey, if we're going to jump in, let's do it right now. I think potentially the same thing of there is a group of buyers that are waiting until next year, waiting until after the election, like, hey, let's wait and see. And I think no matter what happens, whether the market increases, whether the market stays the same, whether the market goes down, we're going to see more pent-up demand of buyers that have sat on the sideline and gone, okay, it looks okay, the sky isn't falling, now
right.
we'll do it. Or, I mean, I guess if things started to drop a little bit, there's the potential that a buyer could wait and to see how far is this going to drop. But I think if things stay the same, then there's going to be a slight lull, and then all this pent-up demand of buyers sitting on the sidelines are going to jump in and say, okay, I'm not going to sit on my thumb forever. Let's do this and let's see what we can do to make this happen. So
yeah, I agree with that. I think probably for me the tone of the market for the next maybe 6 months, I would say, is muted. You know, it's at a level right now, and it's probably going to stay the same with the same number of buyers and sellers, which is a lower level than we've had. And I think it's going to sit that way until after the election, until after January. And then, like you say, if there's a pent-up demand and buyers really start coming out again, prices are going to go back up again, because sellers are going to see that there's a demand and they're going to push the prices right back up. So I don't think we're going to see any kind of dramatic changes over the next several months.
Yeah,
just kind of more of the same.
I think it's very well spoken, and I think there's never been a time in both of our careers, considering that we've both are now in our 15th year or whatever, that to be able to speak intelligently about what it looks like in 6 months, I feel like is really, really difficult, just because of how uncertain it all is. And with many of these people, I feel like I can tell you what the market looks like today, and I can take some guesses on what it looks like in 6 weeks. But I mean, I look at the stock market and I feel like tomorrow it could jump up 10% or go down 10%. And I would kind of be like, yeah, I guess. Whereas, and what I appreciate about residential is it seems like, as compared to all of these other investment classes, at least lately, it's far less volatile. People need a place to live. Land is getting destroyed. Commercial space, our company, 17 offices or whatever it is renegotiating their leases in every office, as is any other major corporation company. And on top of that, the stock market is all over the place, and yet residential real estate continues to be consistent. So yeah, I think that what I'm telling people is the downside of you sitting it out and waiting is the last couple of years, the market has appreciated at a 6% clip. And granted, that's not linear, but if it was, that'd be 0.5% per month. So if you wait 6 months, then the market's just gone up 3%. And interest rates are going to continue to remain low. But what that means is the $500,000 house is now 515. The $600,000 house is now almost 620. I mean, these numbers, it only works against you, and timing the market is high. Or excuse me, is hard.
Right.
I guess then the other side of the coin is if I'm a seller, let's say I've got an investment property. What do you think? Is now a good time to get out? Should I wait?
Yeah, I think sellers are investment owners are in a tough spot. You know, I think they're being pressured because there's some people who are not paying rent. The government's hasn't really stepped up, and I mean, they've helped the renter, but they haven't helped the landlord. So it puts the landlord in a tough spot. If these if these people sell their real estate investment, residential real estate investments, that's going to put a little more pressure on the rental market, because prices are high already. Now, if you cut another 10 or 15% off of that available inventory, that's going to put even more pressure on it. So I think that investors are looking at it. I mean, we know certainly that the bed and breakfast Airbnb market just totally tanked. Yeah, so you know, anybody who's got one of those is just really hurting, holding the bag there. Yeah. But I think residential rental real estate is going to be a tough market. You know, I think it's going to be expensive, and you know, guys are going to want to get out of it.
I had an interesting story with a gentleman who was selling a property, and he said at the peak of the market, about when we started, that he had millions of dollars worth of real estate and lost it all. And so I asked him, so what would you recommend looking back? And he said, I would have taken money off the table. I 1031'd and I just exchanged, but I was always buying and selling in the same market. And so one of those sales was great, but the other one was also quote unquote inflated. And he said, you know, I would have paid 20-30% in tax and taken that money off the table and hedged a little bit. And so that's kind of an interesting conversation depending on who the investor is. It's tricky, I feel like, when you're buying and selling in the same market, that first time home buyer that sells to purchase the next property and is trying to write an offer contingent or sell it first and then live in temporary housing. But investors, I think they've really got some choice, and it is certainly a very valuable and interesting time. John, I so appreciate your time. If somebody is looking in South Orange County, what's the best way they can reach you?
You know, the best way to reach me is through my cell phone, either text or call me, 949-510-2154. That's probably the easiest way to just reach me by text, or you can call our Century 21 office here in Rancho Santa Margarita. But use the cell phone or text, that's the best thing.
I love it. John, thank you so much for your time. I absolutely
Right.
appreciate you uh, giving us a little insight into the Orange County market and to see how it all goes. And we'll see. Let the gambling begin. We'll roll some dice and
Roll those dice. Yep, you got it,
maybe
man.
maybe it'll land in our favor. But appreciate you, and absolutely we'll connect very soon.
Very cool. Thanks everybody for watching, and good luck for the next rest of the year, Steve.